Well, firstly, responsible investment involves a GP, a general partner or private equity house, in either encouraging or requiring its portfolio companies to proactively manage their environmental, social and governance issues with a view to either protecting or creating value. Now, the limited partners, the LPs or investors in a fund, are becoming increasingly interested in the responsible investment agenda. And as a result, the GPs are having to react to that. They are worried that unless they have a convincing ESG or responsible investment story to tell, they may struggle to raise their next fund. Well, our survey of some 60 LPs across 14 countries last year showed three main drivers for LP interest in the responsible investment agenda. And the first was fiduciary duty. 88% said fiduciary duty was their number one driver. And I find that really encouraging because it shows a very strong connection between their belief in value being either protected or created through the ESG agenda. Their second driver for action was actually reputation risk management. They're very keen to make sure there's no more public relations challenges, shall we say, arising from their investments. And the third one was simply that it's the right thing to do. The corporate values were driving their interest in this agenda. Well, firstly, that GPs join the LPs in signing up to the voluntary principles espoused by the United Nations called the Principles for Responsible Investing. Secondly, that the GPs actually articulate and then effectively implement a responsible investment policy. And thirdly, that they provide information to LPs, and typically this is being requested via a due diligence questionnaire. And the UNPRI has just released its own ESG due diligence questionnaire, which is catching on, but still some of the leading LPs are insisting upon completion of their own rather more detailed, bespoke due diligence questionnaire. Well, they are signing up to the voluntary principles, the United Nations Principles for Responsible Investment, 983 firms, in fact, and still counting. Moreover, they're considering what their responsible investment strategies should be. Where does this firm want to be against its competitors over time? How will we know when we've got to where we want to be? Thirdly, they're looking to develop responsible investment policies and properly implement them. And lastly, looking to understand what progress they're making with their portfolio companies on this agenda so that that can be reported. At the moment, those reports are case study based, they're a bit ad hoc, but over time the drive must be to make this more systematic. Aside from having to consider an ESG or responsible investment strategy at the house level and implement it, GPs also need to consider ESG issues throughout the deal cycle, whether that's prior to investment, during the hold period, or even prior to exit. And we've been working with numerous GPs over the last few years in developing the sort of tools that investment professionals need to understand this agenda and implement it, and also to give them some training. Moreover, we've been working to conduct ESG reviews of portfolio companies. And this is a high-level approach to understanding the baseline. Where am I starting from on the ESG agenda just after I've bought a company? And that baseline serves the GP well for developing a convincing story of progress over time.